Let's start. So now we will have a very special kind of event. This is the second time we're having such kind of format event in our Ukrainian Investment Forum. This is called Future of Finance Talks. This is a TEDx-style speeches that will be presented by our CFA charter holders, CFA candidates, and just our volunteers who will try to introduce their thoughts on different topics linked to the future of finance, on how they are seeing such kind of future. And we have a very exclusive prize for the winner of this Future of Finance Talks, of this competition. The prize is a trip to the CFA annual conference that will be held in May 2018 in Hong Kong. Annual conference of CFA Institute is a high-notch, top-level event in the global community, attended by more than 1,000 of top-level investors, investment bankers, and of course CFA charter holders, where people get together all over the world to discuss the most vital problems of the global economy. So this is really a high-level kind of a prize that we are willing to present to the winner of today's Future of Finance Talks. And I'm happy to tell that today we will have 4 participants in our talks. And you, as our highly esteemed audience, will be voting for the winner of these talks. So please listen carefully to what our speakers will be presented. And in the end, after the 4th speech, we will have a voting. We will ask you to cast your vote to find out who will be the winner of the Future of Finance. And now I would like to pass the stage to the first speaker of our competition. It's Konstantin Fastovets, who will present on the topic, the value of emerging markets investment research. Please welcome Konstantin.
The slides, yeah, okay. Hello, my name is Konstantin, and I'm a fixed income analyst based here in Kiev. I've done quite a bit of equity research in the past as well. And the talk here, the value of emerging markets and investment research, is very tightly connected to my work. And I think I'd like to, the way it's connected to the future of finance is I think that the future of investment research is really in emerging markets. So I'd like to begin by splitting up investments into 2 groups, and this is passive investment and active investment. And as many of you know, passive investment is simply investing in an index and sort of waiting for it to grow, and active investment is your typical type of investment where you pick and choose assets, options, or fixed income instruments, and then you readjust your portfolio based on what your thoughts are. This may be a surprise to some of you, but it turns out that passive investment is actually a very viable option, and this has been the case over the past decades on developed markets. And I got a chart here for you to look at where you can see that this is a study done in 2002 that shows the percentage of funds, of active funds that have outperformed the MSCI Europe index, and you can see that it's only 16%. Now, you may say this has been a long time ago, this is just one study, but look at data from the S&P, and this is from today, basically. This is June 30, where the share of funds that actively invest that have underperformed their benchmarks, and this would be for large cap equity, this would be something like the S&P large cap. Is staggering. It's 80% in some cases, and that sort of creates a conundrum for investment analysts and for investors generally, because if you can just invest in an index, why should you care about investing actively? Now, and generally, this is also connected to the value of research as such, because if there's no value, right, if you can just buy an index, what is the value of your investment decisions? Now, does this apply to emerging markets? I'd like to argue that it doesn't, and the reason that it doesn't is because in order for you to have the ability to passively invest, you have to have a sufficient number of market participants. And if you look at something like Apple, for example, a stock that's really widely traded on the US exchange, you can just look at the sell side, and only from the sell side you have something like 50 analysts analyzing this very transparent company. And the buy side there's just so many people doing it, so you have hundreds of people analyzing one company on those markets, and then you have thousands of investors competing for it and investing at the very same time. What you have in emerging markets is something completely different, right? If you look at Ukraine, for example, or really any other really emerging market, you can see that there's just a very few people that actually study these things, very few people that invest, and a consensus isn't there simply. So you can't just buy an index, and an index, even if you built an index, the chances that it's going to be mispriced are really, really high. So there you can see that if there's no way to invest passively, that's exactly where investment analysis comes in place and where it can add a lot of value. Another sort of way to look at this, and that I have a chart, a diagram on the right here, is that emerging markets are characterized by really high risk and really high return. So if you assume that investment research can lower or cut down on that risk, you can see there's just simply a lot more room for that risk to be cut down. And in this regard, you can see that if you can cut down even 20% of the risk, for example, right, in both developed markets and emerging markets, the amount of value that you're going to derive from that is simply much higher in emerging economies. And I'd like to also give a practical example of this, and this is very tightly connected to Ukraine, and this is my experience that I think demonstrates this pretty clearly, is that in markets like Ukraine, you don't really need to have you don't need to do that much analytical work in order to derive really meaningful insights. And the example that I'm going to give here is the bail-in of Privatbank's bonds at the beginning of 2017. Just very quickly, I'd like to list a few insights that I think could have been very helpful for a lot of investors that invested in these bonds. Now, as you know, these were bailed in. They're currently valued at about 30% of their par value on the market, and a lot of investors were surprised by this. Why did this happen? You know, they thought that the probability of this event was going to be very low, and I think that a very simple analytical process could have led them to avoid this kind of loss. Now, so the three insights that I have here, some pretty simple ones, is that if you look at Privatbank compared to all the top 5 banks in the system, you can see that the share of provisions to gross loans for Privatbank was always very low, right? It's staggeringly low, and this sort of hints at the fact that that the Privatbank had a problem with capital. Now, you could say that it's been audited by the Big Four, so the numbers that they're providing must be correct. And this is insight number 2, that in Ukraine, Big Four audits don't mean the same thing they do in the West. And if you've been in this country long enough, you probably heard from RIA, for example, right, which is also audited by the Big Four, and they pretty much doubled their assets, and they got away with it. So this is insight number 2, and that's sort of your bearing on the ground. And then finally, I think one of the most important insights here, and this is what confused a lot of people, is that they thought, Privatbank it's too big to fail. The government is just going to step in and save it, and investors are going to be, cheerful, happy, and they're going to keep their bonds. But in order to bust this myth, all you had to do was look at the IMF document for Ukraine, and this is the #1 document you should be looking at if you're looking at Ukraine from an external angle. And it said pretty plainly there that the public funds are going to be injected into a bank only after shareholders have been completely diluted, and all non-deposit unsecured creditors are going to be bailed in. So it was there for a very long time, and as you can see, this kind of analysis, just knowing where to look for information, is sufficient for you to have a really meaningful impact on your investment decisions. So I think the future of finance lies in emerging markets, and I think analysts should be paying more attention to this kind of work. Thank you very much.